I've tested many different ways, a lot of techniques, a lot of tactics. I've tested them all, trying to find out from auctions what is the fastest way to achieve the money and get big paydays. Well, welcome back. I'm Ted Thomas. I've been involved in the tax lien certificate and the tax defaulted business for 30 years. So I'm going to include information on both of those on this particular episode. So stand by, because here we go. But later on in the episode, I'll reveal a real-world example so you can see for yourself what kind of deal you can go ahead and expect. Now, to start with, there's a big difference between tax lien certificates and tax defaulted property. All right, now they're both investments that the public really likes. So I'll just separate the two right away. But tax lien certificates are completely different than tax defaulted property. So let's talk about the highlights of those two. So when it comes to tax lien certificates, the county actually makes a covenant. That's a promise that you'll get paid. So the beauty of buying tax lien certificates is that it's a safe, secure investment. I like to tell people I think it's the safest investment in America today. Why? Because you invest in the government and you're going to get a check back from the government. So the local county will receive interest on the tax defaulted property. And so basically what they do is they sell a tax lien certificate when they don't get paid. So they sell a certificate and anybody can buy it. Now, 95, 97, even sometimes 99% of the people will come back in and actually pay their tax. Now, when they pay their tax, if you own the tax lien certificate, the county will get paid first, and once they get paid 100% of what the taxes were and the high interest, and I'll cover that in just a second, once they have that money, that's when they pay you. So you don't get monthly payments, you get a one-payment deal, getting your money back 100% and that high interest. So the high interest is sometimes considered outrageous interest. Why? Because the interest rate in Arizona could be up to 16%. In Florida, it could be as high as 18%. I've seen as high as 36% in Illinois, and Iowa is 24%. So you're getting the idea. You can make quite a bit of money on a tax lien certificate. Now, there's bidding process and so on. I'm not going to cover on this video, but you'll want to learn about this. So what are we talking about today? We're talking about tax sale auction. What kind of deal can you make? Well, I just told you what kind of deal you could make on a tax lien certificate. Okay, so the interest rate is determined at a public auction, which is announced online and in the newspapers. Okay, but the process is controlled completely by the individual. But the county and the state determine what the auction interest rate is going to be, and those are the numbers that I gave you just a minute ago. So the purchase of a tax lien certificate does not give you any rights to the property. You can't go to the property and harass the people. You can't go there and charge them rent or tell them you're going to evict them. You can't do anything. You're not allowed to go to that property at all. You're only buying a passive investment when you buy a tax lien certificate. So you can't charge any rent. You can't go to evict them. You can't do anything. You have to wait until the right of redemption is passed. So every tax certificate is sold with a right of redemption. During that period, they have to come in and redeem it and completely pay you all the money that you invested plus the high interest rate. So basically, a tax lien certificate is nothing more than a passive investment. You hold a certificate. When the county gets paid, you'll get paid, and you'll get your share of that high interest rate. Your share is all of that high interest rate. So that is a good investment. It's considered by many as the safest investment in America today. Now, it's a whole different situation when it comes to tax defaulted property. Now, the owner does not get any leeway. What happens in half of the counties in the United States, if the property owner does not pay the taxes, what will happen is the local treasurer will lien on the property, and they'll send out numerous notices of default. Now, if the property owner ignores the notices of default, they're going to be in trouble very quickly, because once they stop sending the notices of default, the county then will lien on the property. Then they will levy on the property. And once they levy on the property, that means they're going to confiscate, they're going to seize the property. And what are they going to do with it? They're going to sell that property at auction to the highest bidder. All right, now all of these properties always have a tax assessed value. So you know what you're buying, and you can go and look at the property. All right, but the property, when it's sold at a tax defaulted auction, is sold by the treasurer, not the assessor. It's sold by the treasurer. The treasurer only wants to sell the property. So these properties could be sold 60%, 70%, even 80% less than the tax assessed value. So if you can buy a property 60, 70, or 80% less than tax assessed value, I'm sure you'd want in on the deal. Well, these properties are sold that way at auction all the time. The treasurer is only interested in one thing. Their objective is to collect the back taxes. And to collect back taxes, they're willing to sell the property for 10 cents, 20 cents, 30 cents on the dollar. It's always sold to the highest bidder. Now, what's the treasurer's job? The treasurer's job is to collect money. What do they want to do with that money? The treasurer is the one that pays all the bills for the county. They get the firefighters to pay, the police department to pay, county employees to pay. I mean, it just goes on and on. They're going to have to pay for the people that fix the roads. They're going to have to pay for the school teachers and the schools. So the treasurer only wants to collect those back taxes. They want to get the property off that defaulted tax roll and onto the honorable tax roll list. All right, so it's very positive that what the treasurer is doing if you're an investor. Why? Because the treasurer is going to sell for 10 or 20 cents on the dollar, yet the property might be appraised considerably higher than that. What do I mean considerably higher than that? It's probably going to be assessed by the tax assessor by 60, 70, 80% more than they sell it for at the auction. Why could that happen? Because the treasurer controls the tax defaulted auction. All right, it might take place on the courthouse steps, might take place in a big room at the county, but they're interested in selling that property. Now, when they sell the property, they're going to delete, they're going to exit out the tax deed, or if there's a deed or trust loan or there's a mortgage, both of those type of loans will be deleted from the property. However, municipal liens and federal liens, if there are any, could still be on the property. So you need to check that before you buy a tax lien certificate or a tax defaulted property. Now look, I've tested many different ways, a lot of techniques, a lot of tactics. I've tested them all, trying to find out from these property lists and from auctions what is the fastest way to achieve the money and get big paydays. This is the way to get a big payday, by buying tax defaulted property and buying it for 10 or 20 cents on the dollar and then selling it for maybe 40 or 50 cents on the dollar. And those properties will be sold without a mortgage or a deed or trust loan. So that's what this video is all about today. Now, this system has been tested and perfected with real deals while there's real money on the line, and that's why it works so well. So be careful. If you're going to get involved in the business, this can be a minefield. You want to think about getting a coach, or you want to get some guidance so that you know how to do this. I'm not saying that it's easy to do. It's not easy. It's a very simple business, but I can assure you that it's not an easy business to do. Keep in mind, investors are motivated to make money. Now, a lot of people think this is a get-rich-quick. So the average person, they won't put in a lot of time to study and learn how to do this. But you're going to see in the examples that I'm giving you now, these people are motivated, they're willing to work hard, and they make money. So I'll give you an example. In a local county just north of Tampa, Florida, one of my students purchased a property, a single-family home, and he only invested $9,100. So conventional wisdom says it takes a lot of money to do this. Well, here's a perfect example of how someone got in for $9,100. All right, now this was a used and abused property. It was completely covered with trees. It was very difficult to find it. It wasn't on a paved road, but it was a nice piece of property once you cut down the trees. The assessed value on the property was $91,000. So $9,100 was the purchase, and the assessed value from the tax assessor was $91,000. All right, now the student who learned this, they took advantage of the training that which we gave them, and they went out and checked other comparable values, and they found values up to $150,000, yet they only had to pay $9,100. Well, what did they do with it? They followed the sales and the media that we told them to do, use media to get these properties sold. That's exactly what he did. He used media to get it sold, and they sold the property on a contract of sale for $150,000 to a fixer-upper person who was basically a tenant and willing to fix the property up, gave them $5,000 down, and was willing to make payments for the rest of the way, sold the property for $150,000. Now ask yourself, how many deals like that would you want to do in your life? Well, you'd certainly like to do one once a year. Now, as I said, this is a simple business. I never said it was easy. This business requires that you work. Now, what I've just showed you is a teeny tiny glimpse of the kind of spectacular profits that you can make. Now, there's many more like this that I'll show in future episodes. So I'm going to run out of time right now, but I do want to tell you all the rules are made at the state level. All 50 states in the United States are run by state legislature, and they're the ones that determine auction rules, and they push them down, and they're all enforced at the local county level. You see those little white circles? That's how many auctions are taking place within that state in the next 90 days. This calendar updates every single day. I'm here today to show you how to make money. To do that, I'm going to show you briefly that there are thousands of tax defaulted real estate properties across the 3,000 plus counties in the United States. This is quite interesting. You're looking at the Ted Thomas Magic Interactive Map and Auction Calendar. It changes every day. Now, I created the calendar and the map so I would know how many auctions are taking place every day in the United States. Now I can show the little guy how to make money. Most importantly, I created this system so I could have an auction list for each auction 24/7. If it's a small population county, there'll be dozens, maybe hundreds of properties, okay, that you could be purchasing and know about. If it's a large population county, there'll be hundreds and even thousands. I've been to auction where there's thousands of properties that they're going to sell. If you'd like to know more about this and see where the auctions are and how many, just go right below me and we'll give you free information.
I'm here because I have 9 to 5. I want to get out of it.
I don't think I can do it without the help or a good coach.
His energy and knowledge really brought everybody up and made it a great experience.
Don't forget, request your free gift right below me.